Hey guys, Dave with Moneyology.com. Hope everyone is having a great weekend. This is the Precious Metals Review for April 28th, 2019, where we'll take a look at various different charts from gold, silver, and the various mining ETFs, and to get a better understanding of what's going on in the overall markets in the PM space. So starting with gold, weekly time frame here. We broke out of this downtrend from 2016 here around July of 2017. And by the way, if you took a look at the longer perspective, 2016 was a major breakout. This chart right here, if you draw a line, this was a major breakout from a downtrend that has been taking place since 2011. So this broke out. We had a really nice run, and then we pulled back, pretty nasty pullback, broke out of it, and now we retested it from the downside. Now we're from the upside rather. Now we're creating a cup and handle here, and now we close the week very strong. We close the week above the 50-week moving average, above the 200-week moving average, and we're in this bullish flag formation of a cup and handle, and I think we're going to break out, if not this week, then surely next week. We close the week above the 50 RSI, very positive development. This could be a fake breakdown. I wasn't surprised that this occurred, because when you see moving averages like this, you've got a lot of amateurs that are putting their stop losses right below them. And so if you bought here and your stop loss is below the 50-week or 200-week moving average, well, what do you know? These algorithms, they know this. And so they shake you out, they sell you, get these stop loss positions, and then they buy. And this is why you get these very strong hammer patterns very often right at these confluence of momentum of moving average points. And so now let's see what happens. If we can get a follow through and break out of here, this would be your indication that this is indeed going to make a run for that 1350 and probably break it to the upside this time around. Gold from a daily perspective, this one has been, this is another perspective of the same cup and handle here, and this is kind of that bullish flag that we pointed out, and it's pulled back, and it was a pretty nasty pullback from various perspectives. One is momentum was just weakening pretty dramatically here from this drop from 1349 to 1280. It was a pretty nasty drop, and what was very hard from a technical standpoint is this particular move had positive divergence. I mean, this was 1349 had a higher peak than 1331 did in momentum. So the fact that we pulled back so strong was quite a surprise. But again, technical analysis is not a predictor of the future. It simply gives you probabilities of what may happen based on what's happened in the past. And so now we broke out of this particular pullback, and now we've consolidated, and we've kind of back tested here, and now that 2075 level is a very strong support level, because as you saw on the weekly, that's where the 50 and the 200 week moving averages are there, and it coincides with the 200 week moving average around the daily. So now you've got PPO curling very strongly back above zero, and if this breaks that 1295 1300 area, that's really going to be an indicator that this wants to move higher. I'm just going to draw this line here for you guys here. So this is the level that you need to break out of to indicate that the bullish move is indeed moving higher. This is a little messy. I'll clean it up afterward, but this is kind of what we're looking at from a cup and handle perspective. All right, so moving on. Silver weekly is kind of it's been weak. It's been very weak, and yet at the same time it's building strength against gold. And that's what you want to see. Now, obviously, this breakdown was very, very sharp and largely unexpected. We broke down from 17 all the way to 14. We rallied, had a double bottom with positive divergence here, higher highs in momentum. We had a nice rally, retested this downtrend, and sure enough, there is a lot of resistance here. This is where a lot of these commercial hedgers are going to start initiating short positions to protect their assets, and this could be some of these silver mining companies that are actually doing it, and that's why we see a lot of weakness here. However, you're finding that this particular pullback, even though we fell in this range, look at momentum. Momentum was much stronger here than in the previous breakdown, and so I think that this is going to find support, and I think this eventually breaks out above this downtrend, and that's your trigger to go longer term. Silver here from silver gold ratio. So you want to see silver outperform gold. And so we broke out of this downtrend that we've had since 2016, and now we've consolidated from the upside. And while at times it has looked very, very weak, I think it's starting to curl back higher, and this particular downtrend is going to be broken. Again, notice the higher highs in momentum. That's very positive, bullish momentum despite this consolidation that's often found silver on the weekend. So this gold, this is the opposite of that very same chart. This is gold versus silver, and you're kind of seeing a head and shoulders being developed here. Look at this lower highs in momentum. That's a very positive development for precious metals bulls, because if silver starts outperforming gold, which it's started to do, certainly it's built momentum against gold, I think that this can be another indicator of a very strong upcoming bull market. Here's the US dollar weekly chart. And a lot of folks have been pointing out, and I've posted a lot of these charts, reposted this, because, this is all about clarity and transparency. This is not about creating one perspective and hoping it works out. No, this is about getting it right and doing well in the markets, and whether it's bullish to the US dollar and bearish to precious metals or vice versa. But it's been consolidating here. So from a price standpoint, if you're just looking at price, you might think that this is ready to break higher. And a lot of folks do. In fact, the majority of investors, macro investors, are really positioning themselves for a breakout in the US dollar. And to be fair, there have been many periods over the last 30 years that the US dollar has performed well while gold has done well. So that doesn't mean if the US dollar breaks out, gold's going to necessarily fall, but certainly would make the trajectory higher much more difficult. But notice, momentum is very important. In my opinion, from my perspective, momentum is more important than price. And notice that the dollar broke down in momentum. I would say this was around December of 2018. Now we're just retesting it from the upside. We haven't even broken this downtrend, and let alone retested this downtrend. So whereas we're building new highs, we're creating consecutive new lows. That's 4 new lows in momentum. That's a very negative development from my perspective in the US dollar. A lot of times, I pointed this out last time around. We were making new highs at 100 and 103, yet momentum was weak. And we can eventually broke down all the way to 88. I think this is a last hurrah for the US dollar before we move back into the 80s. But of course, what I think is irrelevant, price is ultimately the only thing that matters. So here's the USD daily. Here again is that negative divergence. It's kind of double top here around that 69 level. But price hit a new high, yet momentum did not make a new high. So that's a negative divergence example. And I think eventually we break lower. We need to break below the neckline of 97.50, hopefully this week for the bullish case in precious metals to really pick up steam. Here's the gold miners index as represented by the GDM. That's a New York Stock Exchange index. And this is a monthly perspective, so this is longer term. Notice this downtrend in momentum. Every time we've hit this particular marker, except here, we kind of broke, we've turned lower. But it's creating this inverse head and shoulders here, and I think it's eventually going to break to the upside. And when it does, notice the Fibonacci. I mean, there's a tremendous amount of upside, that's gonna take place if it can break above this neckline. It's got a lot of work to do, but I think it's setting up very well for a very strong second half of 2019 and into 2020. A couple more here. Here's the Junior Miners GDXJ weekly chart. This one, this has been we broke out of this downtrend here and double bottom with positive divergence. This was your trigger to go long right here. When we built positive divergence, we broke out, and of course, when you have a nice rally from here to here, you're going to have a pullback, and then sellers come in, then you have a stronger pullback, and when you technical support levels break, you're going to have a stronger pullback, and eventually find support. And this is the week that we found that support, and now it needs to show a follow through to break back above that 50 RSI level to show that this move is indeed a legitimate one. Here's the GDX 1 hour chart for those shorter term traders and investors. This one is, look at this. We had a double bottom here in price. We rallied, we retested, but look at momentum here on that retest. It's much higher than, it didn't go here, it didn't go here. It was considerably higher, and this was your trigger point to go long from a long-term perspective. We rallied. Could this pull back and fill this gap? absolutely, anything's possible. Friday, or rather Monday, we could fall back here and then move higher. But excuse me, this particular level needs to break to the upside. There's going to be considerable resistance. This is the point where we broke down right over here. So sure enough, this is the point of resistance around that 69.1 Fibonacci level. So this, if it breaks higher above that 70 level, that's going to be a very positive sign on the hourly. But this last hour suggests that we might have some weakness on Monday in the short run. Okay, so here's the GDXJ versus GLD daily, or rather 1 hour. Again, this, you want the miners to outperform gold, and we were doing it for quite some time over the last couple of days, and so this rally is not a surprise. We probably pull back some and probably move higher, because notice this momentum on the ratio has actually broken higher than the previous breakdown point, so that's a positive divergence. This is where you might find resistance, but we shot right through that last time around. Okay, here's the GDXJ towards GLD ratio on a weekly perspective. You want this to finally start outperforming as it did in 2016. Look at the massive outperformance against the metal. So far that has not been the case. We broke out of this downtrend here in early part of this year, which from my perspective was a sign, the first signs that this is a renewed bull market. But then we broke down, and now we found support, but we've built positive divergence in momentum. Notice triple bottom effectively, but positive divergence, and eventually this breaks to the upside. I'm fairly confident that's the case. Here's the Australian dollar. Typically, Australian dollar wants to do well if the PMs start performing well. It seems like every time it hits that 50 RSI level, it's been getting hit back. It's had a pretty weak week last week. That's a lot of weeks in one sentence. Anyway, but if it can't hold this level at the 70, that's your probable sign that the dollar has broken out and precious metals have kind of fallen back a little bit. But this could also be support. I like the fact that even though we've hit 1, 2, 3, 4 times, momentum is strong here, and it kept finding support around that 40 level, and I think eventually it breaks higher, but anything is possible. Here's the junior silver miners weekly chart. This has been it outperformed considerably in 2016 and needs to do the same thing in 2019 if this PM bull resumes. It's been very weak, but it's been creating this bullish wedge pattern, and it finally broke out in around February of 19, and then pulled back, broke back below it, and but now again, look at this backtested. We broke out here. From a momentum standpoint, we couldn't break above 50, so we pulled back, backtested, we broke out, we had positive momentum, and then again something happened, and then we had kind of negative divergence on the RSI. We broke below the 50 level, and sure enough, that's why we had quite a bit big of pullback. But now we found support precisely at that same level where we found support in times past, and so now we're bouncing. The question is this bounce for real? Well, we need to see a follow through next week, and that'll tell you if this bounce is for real, and you want to see this close above this downtrend here for this to move higher. Finally, one more chart. You want to see silver junior miners outperforming the metal itself, and as it did in 2016. It hasn't done so yet here. This was kind of a bullish wedge it was creating with positive divergence. It was making new highs in RSI, even as it was making new lows in this ratio. Broke out. We retested, but notice the retest. The momentum considerably higher than the last time we hit this price over here. So that's positive. Even though we kind of broke below this momentum trend line, I think that could have been a fake breakdown, and if this breaks back to the upside, expect a very strong move to the upside in the silver junior miners. Bottom line is, my personal hunch is we are very close to a renewed bull market in precious metals. Do your due diligence on individual names. In the premium service that we'll be launching in July, we will have specific names that we'll be watching of our watch list of close to 300 names. So there's a lot of work that comes with these videos and the due diligence and so on. So if you appreciate the work that I'm doing, please shoot me a note at dave@moneyology.com. And we're launching a premium service. We just started development on the website that shall launch in July. We're opening it up to 100 spots. We've got 40 pre-commitments, And if you want to be a part of that, definitely let me know. There's no obligation until July to just to claim your spot. And again, this is a site for active do-it-yourself investors to really become better investors, to better understand their own strategies, psychology, behavioral psychology, and it's a platform. It's not going to be a trading service. It's a platform that's going to make you better investors. It's going to have technical analysis. It's going to have contributors that are doing fundamental analysis on names. It's going to have watch lists, but it's going to have fundamental data. It's going to have technical data. It's going to be awesome, but it can't do it without your support. So if you can be a part of this, really appreciate it if you would. Support my work, dave@moneyology.com, Twitter @moneyology, StockTwits @moneyology, and YouTube @moneyology. Please subscribe. Thank you very much, guys. Have yourself a great week.